Good evening, everybody. My name is Renoy George here with the marketing team at Vakilsearch, and allow me to welcome you all to another live webinar for Vakilsearch's Fundraising Masterclass. So joining me today is Mr. Sanjay Kamlani from Miami. He is an entrepreneur, an angel investor, industry innovator, and cross-cultural business leader. Aside from that, he has co-founded and headed 3 major investor businesses in the USA. Currently, he is the co-founder and managing director of the 1991 Group. They advise funds and build new businesses within the USA and emerging markets with special focus on technology-enabled services in the legal arena. So, good morning, Sanjay. Thank you for joining us.
Thank you. I'm happy to be here.
Thank you. That's great. That's great. Good to have you here. I know how busy you are, so it's really an honor, and we're really grateful that you could join us today.
Absolutely.
Okay. So, shall we move on to some of the questions now?
Sure. Let's do that.
Awesome. Awesome. All right. The topic of today's discussion is how to win over angel investors and venture capitalists, and Mr. Kamlani is going to share his insights with us. I encourage all our listeners and viewers to share your questions with us, and Mr. Kamlani will address them. Let's begin. Given your experience, let's start off by talking about hesitation and action. I'll elaborate. Let's say I have a plan for a business. I've done the research. I know what I need, but I have a comfortable job. As passionate as I am, I find myself hesitating. When would you say is the right time, or is there a right time for me to take a step forward and take a chance on myself?
Sure. Look, I think after you've done the research and you've really understood your market and your potential, and perhaps have obtained at least a team member or a partner in crime, I think at that point, you probably should know whether you believe enough in what you're doing to take that step to leave your job or whatever it is and commit 100% to what you're doing.
Yeah. So is there, would you say that it's about when you get that partner in crime? Is it about finding that one person or finding a team? What would you say is the better person for that?
I think that having a partner tends to increase the chance of success quite considerably. It's certainly not required. There are, hundreds of companies that were founded by one person who built a team. So certainly not a requirement. Certainly helpful.
Yeah. So just to continue with that statement. So if you have a meeting, what does it say if one person shows up, or let's say 2 or 3 people show up for that meeting, at least in terms of looking for investors?
Look, I think investors, when they're looking to consider investment, considering the team is a big aspect, particularly I think at any stage, quite frankly. I guess if you say VC level versus angel, there's more of a chance that at the angel level someone might say, okay, I understand right now this is a concept stage, but by the time you're going to VCs, you absolutely need to present a strong team, and it shouldn't be about just one person. But even angels, I think, like to see that there is a team, because no one person is great at everything, and they need to know that the entrepreneur understands the need for and the benefits of a team.
Okay, thank you. That's certainly helpful. Going on to the next question. Again, this is another one based on your experience. When looking for investors, is it better to approach people you know or people you don't know?
When you are doing a seed capital round, I think it's much more advantageous to approach people who already know and trust you, because at that stage, particularly if you're pre-operational, you're perhaps just a concept, a book with research and a plan. I think it's the likelihood of obtaining capital is going to be very high from people who know and trust you, perhaps people who have worked with you in the past. Much harder to raise money for people who've never heard of you.
And the other side of it, let's say you have taken that step forward, you got the seed capital. Coming on, let's say you are an angel investor. So, if I wanted to take a step forward away from that seed capital, and take things forward.
So at that stage, once you've raised seed capital, you've moved on, your business is perhaps operational, or at least you've built out some of your plan. You now have more of a team. I think at that point, approaching angel groups, angel funds, and other types of angel investors, not necessarily people is fine. So obviously, much better to get to those angels through your network,
Hmm.
because people who are investing, doing angel investments, get hundreds of inquiries, and the ones that I think stand out are the ones that come through a reference. So if you can get to angels through someone, I think that's also much more helpful.
Definitely. I mean, if there is someone with a little more influence, I guess that would be helpful.
Certainly, but I think just the benefit, if an angel investor receives something, an email with a deck or something from somebody, just because they know that person, they're more likely to look at it and give it some consideration. Obviously, it might be impacted by what they think of the person who gave the reference, um,
Yeah.
but I think it's better than going in cold.
Okay. Which brings us to the next question. Uh, so, how do you find potential investors? There is, again, like you said, there's seed capital and then there's venture capitalists also when you want to take things forward on to the next level.
Yeah, I'm sorry. So you're asking, how do you find them?
Yes, I'm saying where do I look for potential investors? So there is the seed capital side where I'm, a first time entrepreneur looking just to start my business. And then there's the other side where I'm looking at angel investors or venture capitalists where I'm taking my business to the next level. So where do I look for those investors?
Look, so clearly one can do research and find out, who are the angel funds, who are the angel networks, who are the best
Yeah.
or well-known VCs, particularly relating to your sector or your geography. One point to note is that VCs in particular like to invest in companies where the management team is in some reasonable proximity to their own people. Um, at least in more developed markets like the United States, VCs
Yeah.
tend to invest in companies that are situated closer to them. Whereas I think in India, I have seen VCs more ready to travel to spend time with their portfolio companies. So it may be different. But the point I'd
Okay.
like to make also about your question is that the best way to get to those people, as I said, is through references and through your network. And so there may be, 100 great VCs with great reputations. The one you need is the one where you can get a reference and you can get through a friend or a family member or a professional colleague.
Yeah.
Um, that's going to go much further than doing research and calling somebody cold.
So since you mentioned about markets, that is the USA and India, I just want to ask: does culture play an important part when it comes to finding investors, or going to an investor and looking for fundraising opportunities?
I think cultural fit is certainly important. I think if you look at different regions in India, there are parts of the country where there's much more of a focus on being ruthless, making money, and growth. Whereas in other parts of the country, I think the culture is more about how you treat people and the dignity of people, and maybe even things like giving back to the community. So uh, I could see there being reason why there'd be a better cultural fit with VCs that come from the same region, particularly in
Okay.
India, where there's so many differences from south to north and east to west.
Okay. So going on to the next question. Uh, okay, this is more of, I would say, based on your experience again. But if how many rounds of discussion does it usually take before an investor is ready to commit to an idea?
I think it really depends on the people. It really depends on the investor. I've seen investors that will invest after, two or three conversations. reviewing the deck and material, having a meeting, having a follow-up call. And it also depends on whether in reality or perception that there's a lot of interest. So if there's a view that there's a lot of interest and that the deal is going to close, and someone might lose an opportunity to invest, they may say yes after the first meeting.
Yeah.
And I've seen those situations. Whereas others, if it looks like you've been raising money for a long time and nobody's investing, it's probably going to take a lot more conversation.
What should one do in that kind of situation?
At some point, if you can afford to do it, sometimes it makes sense to go back to your business and come back and look for money again later, to put some of a break. If you've gone several months and you haven't raised money, then something's not working. You need to maybe address some of the concerns investors are raising, and then maybe come back to the market with some of those issues resolved.
And again, when we talk about approaching investors, there are people who randomly send you messages. They get an email and they send across a message across saying, this is who I am, this is an idea. And sometimes even on you take a platform like LinkedIn, sometimes just people message, influencers trying to get their attention or trying to sell an idea. What is your opinion about that?
I think that there are certain types of institutional investors, VCs, where they may have a process for how they look at those cold emails, where either using AI or using people, they are analyzing the domain and filtering them to the ones that they might actually want to look at. For individual investors, if you're looking for seed, I think it's very hard because seed investors don't have infrastructure to filter, and so at some point I think they're pretty much ignored. And like I said, I think seed investors are looking for deals that come through referrals.
Referrals. Okay, so always get a good.
If you're a seed investor and you're in a network, like if you're in Mumbai Angels, then you just look at the ones that come through Mumbai Angels. So there's some value in going through one of the angel networks.
Okay. So since you're talking about investments, what's your opinion about Shark Tanks or TV shows that focus on these kind of investments and ideas?
Look, I mean, Shark Tank, the individuals on Shark Tank certainly have the ability to take a startup and really leapfrog that business because of their network and their expertise. And so I would say that anybody who goes on Shark Tank and has an opportunity for those investments, the upside is they have a high likelihood of being successful. The downside is that investors like the Shark Tank group take an enormous amount of equity for a very small amount of money. So that's just a choice an entrepreneur needs to make.
Okay. Not to mention, it's a lot of entertainment just watching it on TV, and you get learn from it.
That's right.
Definitely. Okay. So moving on, what according to you is the defining trait of a reliable entrepreneur?
I'll focus here on coachability. I think it's very important for an entrepreneur to demonstrate that they believe that investors have something to add, particularly if they're investors who have experienced and have built businesses themselves. And often angel investors are those kinds of people. If you're a young entrepreneur coming in and having an attitude that you know everything, that the investors don't understand, that they're just supposed to put in their money and leave it up to you, that's not great. You need to show that you are coachable, that you're interested in advice and guidance and third-party expertise.
Okay, so is it fair to say that this person, yes, it's coachable, but at the same time there is a certain amount of passion for them to go that extra mile and work hard?
Well, sure, of course. I mean, but I think everybody knows those things. Yeah, you have to love your idea. You have to really know your market. You have to have a plan. You have to understand the numbers and know how you're going to get from, point A to point B and finally to exit. You have to have a plan on how you're going to do that. Sure. But are you a know-it-all, or do you believe that people have value to add and do you seek it out?
Another thing is related to the defining trait, which I asked earlier. This is more about bias, because let's say an entrepreneur looking for investment, looking for fundraising opportunity shows up, uh, but he does not necessarily have all the educational qualifications or requirements that probably an investor is looking for. Would that act as a bias or a deterrent?
Uh, so are you asking specifically about educational background?
Yes, I'm saying like someone shows up, they're asking for $1 million, and they are a high school dropout. I'm just saying. So
Yeah.
does that really hinder his chances, his or her chances?
Yeah, I don't think so. I don't think that hinders its chances at all.
So going on, would you mind sharing the story of your first meeting with a potential investor, and how did it go, including how you prepared for it?
Honestly, the first potential investor that I approached for Pangea 3, it was a very short meeting because my business partner and I shared with him the concept and what we were trying to do. His response was basically, "That's the most ridiculous idea I ever heard," and that was pretty much the end of that meeting. Um, I guess the learning from that is just because one person or 10 people think your idea is ridiculous doesn't mean it's ridiculous. You just sort of learn what you hear from and move on. So other meetings that we had went very well, and we were able to present a plan. We were talking about really changing an industry and doing something kind of new that had scalability. We
Okay.
were a team. We were partners that complemented one another, and it
Okay.
was clear that we had a plan to build a well thought out team. So we were able to raise our angel round, I would say, in about 6 months.
Wow, that's great. So just between, I mean, since how long did it take from that first meeting that didn't go well to getting to that second meeting?
Oh, we had multiple meetings kind of set up once we started going out to raise money. We scheduled series of meetings through our network, and from when we started raising money uh, to when we finally closed our lead investor, it was about 6 months. But that's not to say that the whole thing, that from the day you start, it's 6 months. It takes 6 months to build a plan, to
Hmm.
be prepared, to do the research, to
Yeah.
work through all the issues, and then be ready to go to market. And if you're ready and you've done all your homework, I think it can
Yeah.
be done in 6 months.
Oh, okay, sure. I mean, all of this is new to me, so it sounds exciting actually. So over the years, when you look back, what has changed about the fundraising process?
Well, valuations certainly change over time. They go through cycles. Uh,
Yeah.
and I would certainly say, I wouldn't say that we're at the lowest point now. I think we've come back. The lowest point was probably 2009 or 10. Um, the highest may have been 2000. 1998 to 2000, the valuations were insane, quite frankly, and I don't think they're at that level today in terms of the kind of valuation that a concept stage company can get uh, was much higher at that point than it probably is
Okay.
today.
Okay.
And by the way, I think it also matters in terms of your location. So
Huh.
valuations in the Indian market today, I think, are lower than valuations out of Western countries, particularly for startups.
Right. So is there a difference in terms of the countries that wherein in USA people are more willing to take chances on each other?
I do not have a view on why. It could just be, it may just be that there are more startups, there's more demand for investing in startups in the US, but not sure why. But if you are an investor in India and you have access to capital in the US, the likelihood is you're going to get a higher valuation uh, if you try that.
Okay, this is an interesting question. What's your take on using digital mediums as a tool for raising funds?
I think in some cases digital media works. If you're talking about, there's you could be talking about just sending mass to people, and we've talked a little bit about that. If you're talking about ideas like crowdsourcing, look, I think it certainly works. People are out there crowdsourcing and raising money from hundreds of individuals who they never meet, and I know it certainly works. What I suspect is that those valuations tend to be lower, and there are different regulations around that. I'm not sure what regulations are in India, quite frankly, about crowdsourcing, but there are special rules in the United States that allow it.
Okay. So one of our viewers, Raj, he's asking, how do you look at SaaS or product-based startups?
My opinion about SaaS today is that they tend to be a commodity. Very often, SaaS software startups are doing the same thing that other SaaS the software businesses are doing, and even if they do come up with something unique, there's nothing to stop another company from copying their idea if they have a good idea. That's one issue. The second issue is that there's so much SaaS software in the market that professionals, if it's for professionals or whoever your users are, they find themselves faced with so much software that they don't use what they license. And so I believe that in the next decade, what we're going to see is a convergence with services businesses and businesses offering solutions to customers that involve a human element as well as a SaaS software based functionality.
Okay, Bala is one of our viewers. He's looking at your take on startups with vision, but what about the marketing budget? So we're planning out his marketing budget in terms of startups with vision.
Yeah, look, marketing budget. You certainly need a marketing budget. I'll give you a very specific view. I think that there are better ways to spend your marketing budget than on advertising. In my experience, focusing on PR, digital content marketing tends to be much smarter and more productive from a dollars and cents standpoint. And I think paid ads tend to not get you nearly as far. But I think marketing certainly has to be a part of your plan.
Yes, I was just going to your group, the 1991 group. As I understand it, you advise, fund, and build new businesses within the USA, and you focus on products, technology-based services within the legal arena.
Yes.
So I was wondering, how the different types of entrepreneurs you meet on a regular basis. Is it that you invite new entrepreneurs?
I primarily focus on my relationship through the Duke Angel Network, meeting entrepreneurs that come out of Duke University, either from the medical school, the engineering school, or other parts of Duke University. As well as some startups that come out of the Mumbai Angels Group, and a couple of angel networks here in the United States. I tend not to look at angel investments that are not coming through a reference or a part of those networks.
Yes. Okay. So Sanjay, we've come to the end of our session. So I wanted to thank you for your time and all the advice you shared with us.
Okay. Well, thank you very much for having me. It's been a pleasure.
Definitely. I mean, I look forward to, hosting you again on another webinar. Thank you. And our viewers, thanks. Hope all of our listeners have found this session to be informative. If you'd like to know more about fundraising, feel free to check our services at vakilsearch.com. Follow us on Facebook, LinkedIn, Instagram, and Twitter for our regular updates. On behalf of everyone here at Vakil Search, I wish you all a very good evening and a relaxing weekend in advance. Until next time, this is Vinay George signing off. Thank you, Sanjay. Have a great day.
Thank you.